Let's head over to Yahoo Finance's Ines Ferre over at the Wi-Fi Interactive. Ines.
And Brian, let's start out with commodities because we have seen oil fluctuating quite a bit for this week. But oil is headed for its third week of losses. We're looking at WTI right now that's down more than 1%. Brent crude is also lower. A lot of this has to do with the China lockdowns and demand concerns. Fuel consumption in China is expected to drop about 20% in April from a year ago, according to Bloomberg. Also looking at U.S. natural gas prices, that's set to close at its first weekly loss in more than a month after those very volatile prices that we saw earlier this week. Looking under the hood at some equities, we are watching in the travel space, United Airlines extending its gains from yesterday. Also, AAL up more than 3% as well. In fact, when the markets were declining yesterday, both of these airlines still maintain quite a bit of their gains. A lot of these extended gains today have to do with analyst upgrades and price target increases. And then finally, just looking at the sector action, we are seeing healthcare and materials today, which are lagging. If we just pull up a 5-day chart, you can see that real estate and consumer staples this week outperformed. And you've got healthcare and also communication services, which lagged.
Ines, now that we have a lot of the demasking of America, and that coupled with Netflix's abysmal performance earlier in the week, is that sort of the nail in the coffin of the pandemic era darling stocks?
Yeah, I mean, when we take a look, I actually just wrote a piece about this. And in fact, if you look at the NASDAQ 100, I'm going to pull up a year-to-date chart so you can see the bottom performers of the NASDAQ 100, a lot of these being the pandemic darlings. You've got Netflix, you've got Zoom, you've got Peloton here, you've got also Moderna. And we've seen this trend of investors shying away from the stay-at-home stocks and going into more of the reopening trades. But when you look at what happened with Netflix this week, it really underscores the steepness in the declines that we've seen with some of these stay-at-home stocks. And the question is, can these go lower? And for people who perhaps didn't sell during the violent downturns for these stocks, when do they expect these stocks to go higher? Megan Horniman had spoken to the 3 to 5 p.m. show earlier this week. She's from Verdens Capital. And she said that there's still plenty of room for these stocks to reprice, given higher interest rates, given that investors are going more into the reopening trades. But if you look at what retail traders did, Vander Research came out with some research that on Tuesday, retail traders were buying into Netflix when the stock was down 35%. I also had taken a look at Fidelity orders by retail traders, and that was a #1 trending ticker with more buy orders than sell orders. But I do want to point out one last point. Take a look at here. Netflix down 62% year to date. Facebook down, or Meta down 44%. Two of the FANG generals are significantly down.